Traders, I want to quickly show you what a breaker block is. In our last session, I taught you how to identify mitigation blocks in the foreign exchange market or on the chart. And we have equally said that there are 7 institutional reference points. The first amongst them is the mitigation block, bearish and bullish, and the second is the breaker block. So let's look at the difference between a breaker block and a mitigation block. They almost look alike, but you have to pay attention to the details here. For the mitigation block, let's look at the bearish scenario. We said it is formed when the market is in an uptrend, forming higher highs and higher lows, and eventually we see the market fail to form a higher high, and then when it finally drops below the last higher low that was formed, means if it takes liquidity below the last higher low that was formed, that is sell side liquidity. We are going to pay attention to the last sell candle that occurred prior to this buy, and that last sell candle is going to be our mitigation block. Anytime price returns to that last sell candle, we are going to look for sell opportunities. Why? Because the smart money is selling there. They have orders there. They are mitigating their positions. Okay, we say for the mitigation block, we don't want to see price trade above an old high. Okay, it means liquidity should not be taken above an old high. Buy side liquidity should not be grabbed. So we should experience a kind of failure swing here or a buyer's remorse. And on the contrary, we said for the bullish mitigation block, it is formed when price is also forming lower highs and lower lows, and eventually we see price fail to create a new lower low. Instead, it creates a higher low. Now we are going to pay attention to the last buy candle that was formed here. If price takes liquidity above this high, which is buy side liquidity, whenever price returns back to this high, we are going to pay attention to the last buy candle that was formed here, and that is going to be our bullish mitigation block. I hope this is clear. So to make things clear, the mitigation block 1, there should not be a run on two-sided liquidity. Means liquidity should only be taken one side, okay, from one side. The second case is liquidity should not be taken above an old high if we are bearish for the bearish mitigation block, and then for the bullish mitigation block, liquidity should not be taken below an old low. I hope it is clear. So we are going to use this to look at what a breaker block is, because it is the opposite, even though it looks the same, but it is the opposite. Let me make this increase the opacity so that you can see what I'm saying clearly. So that should be our bullish mitigation block, and here should be our bearish mitigation block, the last sell candle that was formed here. It should be our bearish mitigation block. Okay, now let us look at the bullish scenario. For the bullish scenario, when we talk about the breaker blocks, now liquidity has to be taken in both sides. Let's say if we are in an uptrend, means we want to see the market form higher highs and higher lows, and eventually we see the market. Remember, for the mitigation block, price should not trade above an old high, okay, and liquidity should only be taken below, okay, for the bearish scenario. Now let's say we trade above this old high. Okay, this is an old high here, this higher high is an old high, and above this higher high we have liquidity or stops, okay, buy side liquidity. Now if price trades above this higher high and takes liquidity above this higher high, buy side liquidity, then drops aggressively, takes liquidity again below this higher low. This is an old low and this is an old high. Now we are going to pay attention to the last buy candle that was formed here, the last sell candle that was formed here, because from here to here is a sell, okay, from here to here is a downtrend, it is a sell. So we are going to pay attention to the last candle that was formed here, last sell candle, because it is that sell candle that has pushed price to break above this high. That is why it is called a breaker block. a breaker block. A block is simply a candle, okay? It represents huge financial transactions that was carried out by the large institutions or the smart money, okay? That's why we refer to as a block in smart money concept or in trading in general. Now, if the market trades below this old low, okay, and then eventually returns to this last sell candle that was formed here, we are going to consider it as our bearish breaker block. I hope this is clear. So we are going to look at what the last sell candle that was formed here. Remember, from this level is a sell, okay? This from here to here is a sell. I hope this is clear. From here downward here, this is a sell. I hope this is clear. This is a sell from here downward. This is a sell market, okay? Because we have bearish candles here, and from here upward is a buy. From here upward, if you understand what I'm doing here. So we are going to make this green, representing the green candle, and we are going to do a multiple of it so that I make it very clear. This is a buy from here upward. That is a buy. I hope this is clear, represented by these green candles. So what we are going to do is we are paying attention to this last sell candle that was formed here prior to this buy, because it is this candle that has pushed price upward, that has pushed price to break above this old high. Now, anytime price returns back to this candle, we are going to consider it as our bearish breaker block. This is our bearish breaker block, and we are going to be selling into it. Okay, so this is our trigger here. We are going to look for short opportunities at this level, and we'll sell and we'll target the opposing liquidity, which is the stops resting below this low here. Okay, I hope this is clear, because below this low we have sell side liquidity, and below this low also we have sell side liquidity. So for a bearish breaker block to be valid, the market has to trade above this high, take out what buy side liquidity, and the market also has to trade below this low. Okay, this is a low, this higher low, and take out sell side liquidity. So you see that there's liquidity taken above and below. I hope this is clear. But when we talked about the mitigation block, liquidity only had to be taken below, but for the breaker block, liquidity has to be taken both below and above. This is buy side liquidity. You are going to do liquidity, don't worry. For now, liquidity simply means stop loss, okay? Liquidity is your stop loss. When you place a trade and you put the stop loss, that stop loss is your liquidity, okay? Because that is what the smart money is running out for. So above there is buy side liquidity, and below here is sell side liquidity. Yes, this is correct. This is sell side liquidity. So the market has to take both buy side liquidity and then sell side liquidity, and we are going to pay attention to the last sell candle that was formed there. That is our bearish breaker block. Now let us flip the coin. Just give me 1 minute. Let's flip the coin. Let me invert this. Good. Now we are going to turn this to sell side liquidity. It becomes sell side liquidity. Let's reverse it. Sell side liquidity. Good. Now this is going to be below, bottom, and then center, and then this is going to be buy side liquidity. Let's flip the coin, okay? Because it is below, it is above an old high. Above old high we have buy side liquidity, and below old low we have sell side liquidity, which is your stop loss actually. Let's put it top and then left. Good. Yes, this is perfect, no problem. So in this case it becomes different, okay? From this this small move over here is an uptrend. This small move here is an uptrend. So this is where the difference comes. This should become a green candle because it is a buy candle. We are in an uptrend. It takes time to do this, but we have to get through this. Sorry. Permit me. Let me need to change this to green. Good. And then this should be, let's put this red, okay? Let's make this red, no problem. Let me make this way, okay? And then we'll change this to red. I'll change this one also to red because it is a cell. And then I'll change this one also to red because it is a cell. Thank you. Thank you for being patient. Yeah, good. So this is what we are talking about here. Now, for the bearish, the bullish breaker block, in this scenario, it is the last sell candle, the last buy candle, sorry, that was formed here. Give me 1 minute again. Good. Let me do this. And let me increase this. I'm doing this live. I'm sorry. You have to see through this. I'm sorry. Oh, good. Yes, let's reduce this candle like this, and then we increase this one like this. No problem. I hope you get a sense. Don't worry about everything I'm doing here. Just get a sense, okay? This is not a candle chart, so I'm trying to draw this out. Good. Perfect. Let's manage this like this. I hope the message is passed across. Perfect. So for the bullish breaker block, we have to first of all be in a downtrend. We have to be in a downtrend where we see the market form lower highs and lower lows. Okay, lower lows, lower highs, lower low, lower high, because this high is lower than the previous high. Okay, now we want to see this trend continue, but eventually we see the market trade below this lower low and take all the sell side liquidity below this lower low, and then displaces above aggressively, taking again the buy side liquidity above this high. Okay, now from this move down here to up is an uptrend, meaning it is forming green candles. It is a buy. Now we pay attention to the last buy candle that was formed here prior to this drop lower. Okay, because it is this last buy candle that is pushing price to break below this low. That is why it is called a breaker block, a bullish breaker block. Why? Because it is going to push price upward. It is signifying reversal. It's a potential reversal in smart money. Okay, this is an institutional swing point because this is the level where the institutions will want to take price to the opposite direction. I hope this is clear. So you are going to pay attention to the last buy candle that was formed here prior to this drop higher, and you are going to mark it across like we have done here. You are going to extend it across like this, and anytime price returns to this last green candle, this is the green candle here, you are going to mark it across. I am going to name it, okay? Always make sure you name it with respect to the time frame, because these things will form in various time frame. From price action is fractal. It's going to form, you are going to have the daily breakup blocks, the weekly breakup blocks, the 15 minutes, 5 minutes, 1 minute, even down to seconds. We are going to have them. So anytime price returns back to this breakup block, that is where we want to take our buy, and we are going to target what? The opposing liquidity above here. Okay, we are going to target the opposing liquidity. So this right here is our trigger. This right here is our trigger here, this candle. Okay, when it returns there, we should buy. That is our bullish breaker block. I hope it is clear. We are going to go to the chart and we are going to look at examples. Now let me take you straight to the chart. We are going to look at the bullish breaker block and the bearish breaker block. This is GBP USD live market at the time of recording this video. It is the 30th of September 2024. Let's look at the chart and see if we can spot any breaker blocks. Good. Let's start with the bearish breaker block. I'm almost seeing something here, but price did not quite get there. It's okay. Sometimes it will fail. Let's look at if you are going to see a bullish breaker block. Let's see. I'm seeing a mitigation block here. No problem. Let's scan. Sometimes it's difficult to see. Okay. Let's see. If you cannot see it on the 1 hour time frame, you can always switch to various time frames. Sometimes it's difficult to see on the 1 hour time frame. You can see on the 4 hours, you can see on the 15 minutes, you can see on the daily time frame. Okay, let's try daily and see if you can spot a breaker block. Okay, this is GBP USD. Now good, look at something. This is a bearish breaker block here. Okay, even though it is very small, but it is very significant because this is the higher time frame. We see price forming higher highs here, higher highs, higher highs, higher lows, higher highs, higher lows, higher highs, and eventually this is a higher high, but price breaks above this high, taking all the liquidity above here. Okay, and then breaks below again, taking all the sell side liquidity below here. Now we pay attention to this last candle that was formed here prior to this move higher. Okay, and we are going to extend it. It looks very small, but it's very significant. This last red candle, you extend it across. Okay, you extend it across this last sell candle. Now you are going to wait for price to trade back to that candle, and when price trades back to this red candle here, that is going to be your trigger. If you pay attention, you notice how price came back to this red candle. I've not drawn it perfectly. Oh yes, this red candle here, this one. You see, look at how price never traded above that candle again. You see, price never traded above this candle because this is our bearish breaker block. So you could be selling here, and look at how it dropped aggressively. From there, it never came up. Okay, it never came up. Price sold off. I hope this is clear. Now, this is another scenario here. You see, price is trading, forming higher highs and higher lows here. Higher highs, higher lows, higher highs, higher lows, and then eventually it forms this candle that trades above this high here. Okay, and then displaces lower. Now pay attention to how price returns to this candle in future. Maybe I didn't pick the right tool. Just give me 1 minute. Pay attention to how, even though it looks very small, but this is a higher time frame, so you are going to see the candle to be very small. See, look at how price came back to this candle and then sold off. That's our bearish breaker block. I hope this is clear. Now this is another one here. It's going to be very difficult to spot it while you are still learning, but you have to pay attention. Higher high, higher low, higher high, higher low, higher high, and then eventually this candle pushes price above this high here. This high here takes all the buy side liquidity above here, and when price eventually trades below this candle, also taking the sell side liquidity, and eventually returns to that candle, this candle here. See, look at how price sells off from there. It never came back again. It sold off from here aggressively, from this candle here. It sold off, right? So that is our bearish breaker block there. You see, now it's going to be difficult to know it, but don't worry. Now I can see a bullish breaker block here as well. You have to train your eyes to spot it. I'm going to show you too many examples, don't worry. You see, price is in a downtrend, right? And then eventually price trades below this old low, taking liquidity below here, and then trades again above this old high, taking liquidity below here. Now see, this is the last green candle, this last green candle that was formed. Price never came back to that candle again, even though price has not fully tested that candle, but this is a breaker block. Okay, price trades above and never comes back there. Okay, let's see if you can spot another example. This is a good example here as well. It's easy to spot it when you do it frequently. This is a downtrend, right? Lower low, lower high, lower low, lower high, and then you eventually trade below all of this low, taking all the liquidity below here. And what happens? Price trades above this high. Okay, trades above this high, takes all the liquidity above this high. Now we pay attention to what the last green candle that was formed here. We extend that last green candle across. This green candle here, extend it across. See, look at how price came to that candle and then bought off. Okay, bought off. See, it bought off from here. So that is our bullish breaker block. Okay, you see how many examples have we been able to spot so far? So it becomes easy as you train yourself and as you begin to scan the market. This is a downtrend, lower low, lower high, lower low, and then we finally clean all of this low below here. Okay, we trade below this low, cleaning all of these lows here, and then eventually trade above this last high that was formed. So we are paying attention to what the last sell candle, the last green candle that was formed here, which is this candle here. Okay, that is our bullish breaker block. Now notice how price behaved when it came back to that candle. it took off from here, it never traded below that candle. So breakout blocks are very, very, very powerful. Very powerful. You can go even right down to the 15 minutes and you scan the market. You are going to be able to spot breakout blocks. I'm going to take a lot of screenshots and I will share in the group so that you can be able to see exactly what I am explaining to you here. Let's look at the price action for today alone and see if you can spot any breakout block. Let's look at the market. Was there a breakout block in the market today? Yes, there was. Let's see. The market was forming higher highs. You see, this is an uptrend, right? And then it forms a high. Now it trades above this high, takes all the liquidity above this high, right? And then it displaces lower. This is the last sell candle that was formed prior to this move higher. We are going to extend it because IPTA is going to use this candle in future. See, look at how price reacts to this candle when it returns there. You see, this last sell candle that was formed. See, price straight below. Even though we had some difficulties there, but see, look at this candle here. Look at this one. It considers this as a breakout block. This last candle here, this last sell candle, and then price trades below aggressively. So that was a breakout block for today if you traded GBP USD. Now let's see if we can spot a bullish breakout block. Can we spot a bullish breakout block? Unfortunately, there is no bullish breakout block here, but I mean, if you train yourself, you are going to be able to spot a couple of them as you train yourself in smart money concept. So don't worry, it's difficult at the moment, but I trust that one day you'll be able to identify all of these things without any challenge. Let me see if I can see the last example, then I'll end this because this video is already very long. Good. Look at this move. Higher highs and higher lows, and then it takes liquidity above this high, right? And then takes liquidity below these lows here, right? Takes liquidity below these lows. Now in future, when price returns back to this low, this sell candle here that caused this move over here, what is it going to do? It's going to sell off. But yeah, the last it's just short by a few ticks. If you can pay attention, just by a few ticks, okay, it hits almost, and then it said, yeah, it does hit. This last sell candle below here, the last sell candle, look at it, that was a bearish breaker. It hits it and then sells off aggressively, right? So you can practice this, and trust me, you are going to get used to this. Okay, thank you so much. Thank you. Let me cut it short. Thank you.